Hello, guys. This is Poppy JFS, and I want to welcome you to the first episode of our strategy session. And I'll be starting with the structural range strategies. Okay, under the structural range strategy, there are so many strategies that you can build under it. And of course, I will show you how you can get these setups easily. Okay, you being a trader, you need to know exactly what you are looking for, and this is exactly what this is going to solve. This is not just about learning how to analyze. It's not just about you following all this redundant knowledge of go to the higher time frame, do this, do this, do this. This is like a much more straightforward approach to you trading, like trading profitably. So let's start by saying what this strategy is all about and what it covers and what it doesn't. So the strategy works best for trend traders. If you're a trend follower and you like trading along with the trend, this particular strategy works best for you. And also for trend continuations. Okay, I always like to favor trend continuation more than reversals. If you see this particular trend that is going to the upside, and when we add the reversal, you see the market actually offers many opportunities during that trend continuation. There are several opportunities you can catch along that continuation, and the reversal opportunity is just once, right? And of course, if you miss the reversal opportunity, that's more like you have waited for a long time without having nothing. So, and that's why I like teaching strategies that are meant to trade continuations, and this is definitely one of them. Now, like I said, it works best in trendy markets and not ranging markets. So when you have a very consolidating market, you might not really want to use this approach or this strategy. And of course, these are still the same thing. Do not use it for choppy markets. And now reversal, you don't actually want to use this for reversal. However, it can also work in reversal under certain conditions, right? Now we have the bias engine, and that is advanced market structure. So if you have not studied the advanced market structure, you can quickly refer back to the PAC library for you to refresh your memory on it. Okay, and let's go over to the setup trigger. Like when I mean setup trigger, what exactly must you see before you can say, yes, I have a setup forming, or I have a trade about to emerge, right? So let's take a look at the setup triggers. But we have a lot of these triggers, right? So I will show you the main ones, and I'll explain everything. And of course, I will now make it clear which one of these triggers you can choose to use, right? But the main thing that is, in fact, is a common factor, and that is BOS. Okay, the main trigger is a valid continuation BOS. I hope you know in our advanced market structure, not all eyes are called BOS. For example, over here, let me use this particular one as example. Let me use this particular guy here as an example. So you see that we have what we call price breaking the previous high. We had a shallow pullback. So from the previous class, in our advanced class, we know that a shallow pullback will be labeled as inducement. The low will be labeled as inducement because it has not given us anything valid, right? And in this case, our valid pullback or our valid BOS will be this high. So if you want to mark this now, when I said a valid continuation BOS, if you mark this high as your BOS and you are making this low your impulse low, that would have been a wrong thing to do because the low here is not a valid one. So in a nutshell, your BOS must be valid, right? And of course, you know how you can find a valid BOS, when you are following advanced market structure, right? The one that completes a pullback before a new high is being created. Now, another thing that can also help you in getting this, apart from just having a valid BOS from market structure point of view, another one is mitigation of a valid level before the BOS. Now, I think I need to use this one. Valid level before the BOS. Now, this is also important, right? Because look at this. When you have a mitigation rather of a valid level before we have a BOS. So this is more like what I call I call it propulsion block. There's a time I used to teach it. I teach it as propulsion block, right? Saying any POY that does not have a base should not be used. Okay, so what I'm saying here is that if you have a POY that has a base, then that also qualifies. This is another block here. So let's assume that the market or let's use it from this angle here, that we had the particular certain POI here, and you have price trading into that level, mitigating and breaking to the previous high. So the fact that you have price mitigating a very good level here before a break of structure qualifies this particular range also as a trigger, and this BOS as a trigger. So once you have that, you already have that, okay, once there's a BOS, there's definitely an opportunity around the corner inside of your range here. Okay, so the trigger is what the BOS, and these are certain ways you can get the BOS. Like I said, proportion block. This is another example of it. You can see we have a POI here, even though that POI is not valid, it's like a build-up of liquidity actually. But the fact that there was no POI on the left-hand side here, you see, that means we did not consider it at that time because it was not resting on any POI. But this other time, the price actually now mitigated the POI here before going high. Now, this means that we have what? We have an history. I can trace this particular new level now. I can trace it back to a POI, which is a mitigation. So for the price to not break this high, then that means this particular POI can be a thing for me to trade. Because I'm not going to be looking at saying, this one is all inducement, price must later come back. You know, of course, price can still continue external range structure too, right? So, and this is one of the reasons why I would justify that continuation. The fact that what this my POI as a base, it is resting on what? On a previous mitigation. That alone is enough for me to what? To have a setup. You know, when you are trading advanced concepts, you label this as what? Either LIT or inducement, and be like, price must come back before you buy. Price must come back. So these are the certain instances that will give you instant opportunity of a trade without you having to wait all this long time, without you having to wait for long, right? So this is an example here. As long as this particular POI has a base and is breaking structure, I can find something to trade within it, right? So that's a trigger. This is my BOS and that's my trigger. Now, sweep of a valid range high or low. Now, this is an example of what I mean by that. This is like market doing higher high, and this is our range low. So the main price sweeps this our range low before breaking a structure, right? Take a look at it. Price swept a previous range low before breaking the high. Now, this new range here obviously qualifies to be called a new daily range. And this particular one, this BOS here is a very good trigger. Very, very good trigger that we can know that, okay, once a BOS happens from this kind of thing, we know that an opportunity for continuation is just around the corner. Okay, remember, these are all triggers. It's not saying where you are to enter. It's not saying when you should enter. It's just for you to know that, okay, once I have a BOS, I can start looking out for what? Something to trade. Remember, the BOS is the trigger. Okay, and of course, when we get to the chart, I'll show you where all of these things has actually what provided a trigger for setup. Then we have the last one, which is the ICT delay range, and this one is even much more simpler, right? Okay, when we have a stop on before a BOS, remember price grabbing, liquidity, and breaking structure. So this BOS here is a very good trigger because this particular thing alone is what we call a strong low. When price clears a certain liquidity like this, it forms a strong low or a strong high, depending on where it forms. So anytime you have this kind of BOS, you can be sure that you have what? A continuation just around the corner, right? And then we have this last one that I call the double or multiple BOS in the trend direction. Now, this particular one is now an extension of what we have done in our advanced market structure before now. So when we have higher high, higher low, higher high, this is what we can call a single break of structure. Okay, this one is a break of structure, but it is a single break of structure. Like even the other ones I've showed you, they are mostly like single break of structures, right? Now, multiple break of structure happens like this. When you have market doing this kind of push down, up, when the market breaks more than one high, that's what we call a multiple break of structure, right? So when we have something like this, let's assume we have something like this now, and this is a break of a previous high here. This is under break of under high. So in this case here, market is breaking how many highs? It's breaking two highs. So here we have what? Double break of structure, right? It's not just, look at this other one. It's just a previous high that was broken, right? But in this other one here, we have price breaking the first high and also a second high. So in that situation, the low, this particular low of this range here, that breaks at least two highs ahead. That becomes our actual range. And the POIs to use in this case, they are even defined. Okay, we have either the breaker block, which is this particular breaker here, or the market will use this particular breaker, this one here. Okay, these are the breaker blocks that market, like POIs are priced to use this other breaker or the other block. This one is much more defined, like straightforward. So personally, I don't like to use the one that we have here, this one here, that external range. I don't like to use that one, except if there was an inducement above it. Like if there was an inducement like this, okay, an inducement like that above it, that's when I can say, okay, this particular one will be the one I'm using to go higher. But if there was no inducement like that, then I'll be choosing to use my this particular breaker here, this one or the other block. Do you understand? Those are the two possible POIs I'll choose to use, right? And now this is just for double breaker structure. It's just a thing you can apply for extra for much easier and cleaner setups, right? Remember, the trigger is just BOS. So once you're able to get maybe a multiple break or structure, you can tell that okay, we have something just around the corner for an opportunity, which is a return back to the POI, a return back to the base, price returning back to the base. So all these triggers I've showed you, they are all just like the starting points. Okay, they are like the starting point. Once you see those triggers at the starting point, all you need to now know is that there will be an entry just after that. So let's go to the execution. So after you see all these triggers that I've mentioned, there are certain factors that comes after that thing. You know, we can have inducements. Like I said, refer back to your advanced market structure notes. Okay, you know what to see in advanced market structure, right? And now the execution models. So we are going to use top to down analysis on YouTube. So if you see all of this now, if we're using this particular one, let's start with the top to down analysis approach. Now it's much more simple and also defined as well. And what do we have with it? You know, when we have this on a higher time frame, higher high, higher low, higher high, higher low. You know, when you have a trigger word like this on a higher time frame, now that's the point of saying you can use the 3 time frame rules. So this is a BOS. This is another BOS. Now let's say currently it's a BOS here now. Like I said, once you see that break of structure, right, you go and verify this BOS here. Does it have a mitigation? So that means you go and verify if it is actually mitigating something. So can you see that this particular BOS here is not just coming from thin air? It actually mitigated the POI. So you can say, okay, yes, you are much more relaxed. That okay, this one is coming from a strong level. So you know that okay, the opportunity for continuation here is solid. Another thing you can now check is, oh, does it have liquidity? Does it take out liquidity like the one of the stop ons and whatever? But once you just verify that the low that forms that BOS is a valid one, right? You now can now start forming your setup. Now, the setup can come in various forms. You could have your setup coming like this, price probably doing a first pullback, going up, then later coming back to the main POI. But the point is, you know exactly how you can trigger and how you can trade those things. If you have this particular exact this type here now, I believe you know that this is a shallow pullback, and we call that point inducement, right? Another thing is, let's assume that the market also is now coming back to your POI. You know, we have our inducement. It's like the setup on the higher time frame. We have inducements there clearly, like a clear inducement, though, very, very clear inducement. And you have your POI somewhere around here, and you are looking to trade towards that POI. Now that's where this our 3 time frame rules comes in, right? Higher time frame is where you find the clear trend and BOS. Okay. MTF is where you plan. Medium time frame is where you plan your continuation. So the POI itself that you are choosing, you are going to choose that POI on your medium. So if I find this particular thing like this on the 1 hour time frame or 4 hours, if this structure or this trend of BOS, whatever is on my 4 hours, my POI will be chosen on my 1 hour time frame. Okay, I'll choose my POI on 1 hour. Now, to even help you, that's why I made this particular post here, how to select your POI. Right? This is another thing. You know, it's not just by knowing the BOS, which is the trigger word, you knowing where price is going to exactly for you to get your trade. Right? That's another important skill you must know. Now, if you want to choose your POIs, these are the things you can now use in choosing POIs. You have now you must not combine everything. That's one thing that makes a strategy unique. You must not combine. These are options of things to use. We have the PDRAs, we have the demand and supply and hidden zones, we have the key levels in discounts, we have ERL to IRL. Yes, this particular one I know is common within inside our liquidity class that will say, okay, once price has taken external to come to internal. I know it's common in our liquidity class, but also in structure, it is also present. For example, in market structure here now, let's assume we have mitigations internally here. Let's assume we have this kind of mitigations internally here. All of these places here, they are all liquidity, internal liquidity. Everything there is all internal. So whenever you are trying to choose your POY, you will know that price will go and take out all those internal liquidity first. And maybe below that internal liquidity, any POY you now find there is now the one that price is now targeted. So that even helps you to know where your opportunity will also what will be taken from. So that's the essence of using all these ideas. So this one is internal range to external, okay, external to what to internal range liquidity. So you can use that to what to get your certain levels for your opportunity. Remember, the trigger is the BOS. After the trigger of the BOS, you now look for your opportunity internal range. So if I was using demand and supply is very simple. It's either your order block or your inside bar, your indecision candles, your week to week. So you know those things that you have to use in choosing your POIs already. Order block is the one found at the lowest points, right? And your inside bars and whatever could be found in between here if they are valid as well. And also, we have hidden zones. Hidden zones are your breaker block, mitigation block, reclaimed block as well. Those are your what? Those are your hidden zones. So if that's your choice of what of choosing POYs, just stick to it. If you combine your this particular one and PDRs, you'll be getting a lot of confusion. PDRA also is defined. You look out for mitigation block, then breaker, then this and this. That's another approach of choosing your POIs, right? I will actually suggest and I'll recommend using this method, demand and supply, and this last one here, right? Demand and supply or an hidden zones and using external range to internal range method, right? Now, PDRAs, it's not as if it's bad, but I'll prefer using demand and supply, right? Very, very much accurate than PDRAs. Most traders use PDRAs the wrong way. You understand? Most traders always choose the PDRAs the wrong way. You see a trader choosing a PDRA that is not even valid because of the pattern of the PDRA. They also say it's a PDRA and it's present. So most of them treat like pattern, not in terms of which one is valid or not. And we have key levels in discounts. Now, the key levels we are talking about here are more like we are talking about our V-shaped key level, our A-shaped key level, and our OCL. So this is what I'm talking about. And of course, yes, our RBS, our SBR, and QML. So this is what we're talking about in discounts, like where you can be looking to buy inside of this discount after you see a BOS. So A shape or V shape and OCL. Then we can also have RBS. That's break of a previous high. You understand? That's RBS. This is RBS here. Resistance becomes support. That's the meaning. Then we can have SBR also. That's support become resistance. So this is SBR. Although if you look at those things, they are much similar to the ones I labeled in hidden zones. That's mitigation and breaker. Then we can now finally have our QML. Okay, QML also can be a POI for trading in discounts. That's our QML. A failed key level can be reclaimed. So that's a QML here. So these are other ones that you can use for key levels as POI, right? But like I said, I'm recommending demand and supply and internal range to external range. And I will show you examples on the chart. But remember, BOS is a trigger word, and you can now go ahead to execute on your lower time frame. Now, also, when it comes to execution, we have two possible entries or models for execution. You either execute with sniper entry or you execute with confirmation entry. Now, because of the way this particular model is being discovered and the laws surrounding that says once you just find a BOS, don't think too much, just find continuation. Don't think too much, just find continuation, right? Because think about it. Once a BOS occurs, there are several opportunities, right? Let's say you catch about, you are able to get even on one or two. Let's even assume that you are able to get in at this middle point here, and you're able to get a trade, a perfect one from here to this high. Remember, your TP is always the previous high. Your TP should always be the previous high, right? So once you're able to catch a trade here, or you catch the second one also, you know, all those trades you have, the ones you are catching now, they are very, very good and okay. Okay, and that's exactly all you need sometimes. That's all you need sometimes. You don't really have to catch maybe all the moves per se. Or let's assume now you're trying to now catch another one. For example, now let's say this is a BOS and you're now trying to catch another entry around here, and now that one now fails because price is now about to change. But because your own trigger is BOS, you apply the rules accordingly. That says once I see a BOS, I look for entry. Now, once market is about to change, it happens once. That means your setup fails once, and it's not just failing entirely. Also, it's failing to give you something like the buys have been altered, right? But then it also shows you that what a new one is about to emerge, which is a downtrend. So you can start looking for opportunity on that leg as well. Okay, you can look for opportunity on that leg. Okay, I believe just don't forget the BOS is a trigger word. The BOS is a trigger word. Okay, then so, and again, another reason why the confirmation entry tool will save you is because of this. You remember, because we are using BOS, so you really can't tell if that your BOS or this particular retracement now is not coming from on that level. You don't want to know. All you want to know is just the BOS, and that's what you talk about in objective trading. When you are trying to apply too many factors, that's when you kind of like you overthink it. But we just say once I just see the break of the structure, like as long as it's closing above with the previous body candle, that's all I need. So once you think like that, you are now thinking like a robot. You don't have to think too much. Once I see a break above this eye, I look for opportunity, chicken. That's all you want to do. So even if price is about to reverse now and you are looking for opportunity, if you are using a confirmation entry, obviously you won't have gotten an entry here, right? And price would have just broken without you seeing any confirmation. And that would have prevented you from also having a loss. So that's where the confirmation entry also plays important role in this particular model we are talking about. Okay, it plays an important role also in this model, right? Right. And of course, what are the confirmation entry models that I am teaching and I'm also recommending? Number one is the MSS plus breaker or MSS plus RTO. You see, I'll explain where this particular thing works best. I'll explain the two difference and where they work best. First is MSS. MSS simply means when price hits your level, any of the levels you have marked here, once price hits those levels, there are certain things you must see. And you can now say, yes, I want to buy at this level, right? That's what's called MSS. There are certain things you must see. Without those things, you are not going to buy or sell. That is MSS. Now, MSS simply is a structure shift. If price hits my POI, let's say this is my POI here, and we have price coming to that our POI after we have seen BOS. So we now see price coming to a POI on the lower, we are using the 3 time frame rules. You are not looking for entry on the same time frame you see your BOS. You are looking for entry on a much lower time frame. So once price gets to your POI and you don't see that MSS, that means there's no entry. MSS means a structure shift, price breaking your previous high with this kind of move. That's what we call a structure shift. Do you understand? And of course, once you see that structure shifts, it can be a single eye break or a double eye break. All that matters is that a momentum candle or a move rather was formed right at the point of the touch at the POI. That momentum candle confirms the presence of buyers here. Okay, we can say truly we have buyers at these levels ready to what? Ready to go along with the markets. But if market is just sluggish, when the price gets to your POI and the move is very, very sluggish, there's no impulse move, just going up slowly like that, you really can't tell if buyers are actually present here or not. So that's why you look out for impulse like this to confirm your structure shifts. So, and of course, we have MSS plus breaker. Now, the only instance I'll use the breaker, which is this neckline here, is if there's an inducement. So take note, I have two possible reasons I can explain this, and I must mention it very clearly for you to know. When you use a breaker block, MSS plus breaker, if it's a POI, take notes. If price hits a POI, point of interest, for you to use the breaker, if it's a POI, you must have an inducement above it. That means price must create something like this above it. For me to use a breaker block as my entry, this must be the thing that forms there. If price is reacting at a POI, right? If price is reacting at a POI. However, if price was reacting at a liquidity rate, let's say we have a low here now, and price came to that low of liquidity and is reacting at that liquidity rate, I might not need to have inducement before using breaker. Once price breaks high like this, yeah, use the breaker instantly or to go up. If this is what a liquidity rate that's happening here, okay, if it's a liquidity rate that is happening here, do not wait for any inducement. The breaker block becomes almost immediate entry for continuation. Of course, we know that price will later now come back after using that breaker. Price might now come back again to the main order block, but this entry here, you should not miss it. You should not miss it. Very important. So these are the two criteria that you must pay attention to, and of course, make sure you know them very well. Now, apart from all these models of entry, which one is now much more objective? That is not also this particular one is very subjective. For example, this one is only going to be used when it's a POI. This one too. You only use one when is a liquidity rate stuff. So these are subjective methods that you are trying to think at every point in time. Which one should I use? Which one should I do? Should I wait for the other block? Should I go for this one? So in that case, you might have you might still have inconsistency in entry, but I have a solution to it, and that's our second condition here: MSS plus OTE. Right? MSS plus OTE is talking about once you have a structure shift, you are not going to be concerning yourself with which POY should I use, because that's where most of us always we have that headache. Where should I enter from? Which POY should I enter from? Don't give yourself that headache. You can just go ahead as long as you have that MSS first. Once you have that MSS like this, bam, what you can do is look out for this kind of move. Once price breaks the high, giving you that MSS, and a retracement starts, we are going to be using OTE, optimal trade entry, by your Fibonacci. You are going to take your Fibonacci from the low of that impulse to the high. So I have OTE here. So you are going to set your Fibonacci in such a way that you want to get the optimal entry levels. And what are they? We have the 62%. Your OTE levels, they are what? They are the 62%. That's number one. The 71%, that's the 70.5, but approximately 71. 71, or you can use 70.5 actually. And lastly, 79%. Right? These are the OTE levels. That price we always, when price gets there, like I said, you are not looking for POI. Just if your own OTE is 62%, for example, once price just retraces back, you would have placed your order as what? At the 62%. You don't care about if there's another block below or this one. Your own is, I don't want to miss the entry. So once you enter from that 62%, let's say you take a trade here now, from that 62%, your entry and your target will be where? The previous BOS from the higher time frame, Abi. That will be your entry. Very good. The next thing is price can decide to go down to 70 or any of the levels. You don't care. As long as you know that you have entered at an optimal entry level, which is at a low price. You entered at a low price now. All your own is that you have entered at a low price. Price can go lower, but your entry has been taken. And when price is about to go up, you are now in profit. So you are not going to worry about where should I enter. Is it this one? Is it going to use breaker? Is it going to use QML? Is it going to use other block? This is an exact way to use what? The OTE method. If yours is 70.5, now the only downside of 70.5 is you backtest with your currency. Okay, anything you are trading, you check, because on some instruments, market only stops at 62% sometimes. That means if you are using 70.5 to get, maybe higher risk to reward, you'll be surprised that price might just come close to 62% and to start buying from there. And you don't want that kind of thing to happen, right? So what you do instead is what you can use this kind of confirmation, either 72 or 62, but then make sure you choose the one that you know is more common on that instrument you are trading, right? So another thing about confirmation entry is this: confirmation entry works best when your retracement is also a structure. That means, when I say BOS is our trigger, we're having higher high, higher low, higher high, higher low. Now we have a BOS, which is our trigger. And I said one of the things you do here is you can use confirmation entry. It is only going to work best when your retracement to your so-called POI is also a structure. That means a substructure. What do I mean by that? When you have this kind of structure retracing, that's one of the best cases that you can use this particular model for, because at that point it gives you chance to do those your confirmation entry saga, right? You can do you can do any of those confirmation entries before you now take your trade to the high. But if price was returning back in a V-shaped reversal, if you're having what a V-shaped reversal, higher high, higher low, higher high, higher low, higher high, and it's just a single V-shaped reversal like this, one of the easy confirmation you can use here is what? That's if you are still going to use confirmation, is using CRT. Okay, let price get to your POI and then show you CRT model there. So that's on that model of confirmation using just candle ring theory, right? Just using candle ring theory as a confirmation. That's when you have a V reversal like this. But when you have a structural reversal like this, you can as well just wait for price to break structure, wait for a pullback, and then you go ahead with it. But if it's a normal V-shaped reversal like this, market will not give you all the room of doing a break of structure, this one, this one. Do you get? So that's why I said you can use a candle ring theory, or those are instances where you can now use the inversion fair value gap. That means if there's a fair value gap here leading to that point, so the main price is closing above that fair value gap like this. Okay, you can now say, okay, yes, you have what inversion fair value gap or IFVG, and you can use that one as a further confirmation also. So these are the ways you can trade all these things, right? These are the confirmations for your trades. Next thing is counter trend trading. So this particular one, I think I left it blank because your counter trend simply is also permitted, and that is when you are trading counter, like this kind of structure. That's after seeing your BOS, your main BOS for continuation here, and price is about retracing to your main POI. So the counter trend here also only works when it is a structure, like the one I mentioned just now. Okay, you only use counter trend or you trade counter trend when it has a structure, and then maybe you have lower ahead. That's where you can now trade your counter trend to your POI or your internal range liquidity. Okay, with this 3 point of mine, I think we can now go ahead to the chart and look for examples on the charts. Okay, so let's take a look at this example on the screen. Over here, we have a double break of structure. This is it here. This is the second low. So in double break of structure, one of the things that makes even much easier and very, very effective is when we have one internal low and one external being broken. For example, when we have lower low, lower high, lower low. So in this kind of situation, we have just a single break of structure. This is what we call a single break of structure. Okay, a single break of structure. But in a case whereby we have something like this instead, that we have price doing this. So over here, we have what we can call a double break of structure, right? Because this is like a low being broken and another low being broken, which is an external low. So here we have what we call a double, or what you can call a multiple break of structure. So we know that price is going to use this range here. Within this range here is where price is going to get its next trade to go down. So where are the options? The options are, we have either the breaker or we have the order block. So it's a very simple and straightforward rule, right? So the same thing applies here. This under internal low. This like the our main low. We have BOS to the bottom. So without even applying all of those big double brick of structure, whatever, one thing that is even certain is there was a mitigation. Remember, part of the things that validate our low is our BOS, rather, is if it's coming from a mitigation, right? One of the things that trigger the setup is mitigation of a valid level before the BOS. So right here, price was mitigating a good supply before now breaking structure. Hence, this range becomes a thing we want to trade, right? This particular range here becomes a thing to trade. And what we do is we now choose our POI. So, what are the options of choosing POI? Okay, if you want to choose your POI, I told you can choose your POI, or we should choose our POI on the medium time frame. You understand? So you choose your POI on the medium time frame, not on the same higher time frame. So, but right here on the screen, I can as well decide to choose my POI based on what I can see, right? And what am I seeing here is I can see another block. Clearly I can see an order block here, which I can refine to this. Okay. At the same time, I can as well go ahead and use maybe, part of the things I mentioned that we can use in choosing POI. I mentioned those things right here. What are the things that you can use in choosing POI? I told you we have either you are using PD arrays. So if you are using PD arrays, you can as well go on the lower time frame, which is the normal. If I want to use, let's start with the top. I will start from the top and let's see if we have PD arrays here. So I'll go to 4 hours to apply and check if there's a PD array there. So let's go ahead and check it on 4 hours. So we're going to check if there's a PD array present there. Remember, in PD arrays, we are looking out for the first thing being mitigation block. So on this particular range that we have here, the first thing we are looking out for is this is our range from the high to this exact low here. That's our valid range. Okay, and there's a break of structure, and of course, every other thing being present. So if I want to apply Fibonacci, I'll take it from my range low to the range high just to be able to maintain my position of my premium and discount. So this is my premium zone and this is my discount zone. So in my premium, what is the first thing I look out for? A bearish breaker mitigation block. A bearish mitigation block looks like this. Okay, this is all called a mitigation block, or it can look like this as well. That's if it's found within this leg, a continuation leg. An example of this continuation leg is this one here: low, high, low. That's an example of a mitigation block. However, this one here is found at a equilibrium, and at the same time, it is not valid. Okay, there's no fair value gap or imbalance breaking out, so it's not valid. So we are going to omit this one as an option. Then we check out, or we check rather, for the major one that we have at the turning points, and we have something like that there. We have this looking like a mitigation block, right? That's the pattern. So if I mark that pattern or that point as my POI, then I'm marking the neckline we have here as my POI, the whole of this neckline as my POI. Okay, I can mark the whole of that POI as my POI. When you have so this particular thing is always a POI. This neckline is always a POI. Some would refine and use the candle found here, but over here you can see we don't have a particular candle we can see. All the candles here are all stacked together. So we are going to mark the whole range. So also I can decide to now refine lower. And by refining lower, I'll refine to the exact mitigation block that price broke out from. And that is something like this: up, down, up, down. So I'll refine it to that exact one just to get yes, this exact one is my refinement. I'll refine to that exact mitigation, right? It's still maintaining that pattern of that end pattern kind of thing. So being this particular point now being the mitigation block that price will now come back for as a POI. Do you understand? So that is me using PD arrays in this case to choose my POI. Apart from PD arrays, I can decide to also use key levels, right? I can decide to use key level as well to get my POI on the same higher time frame, which is daily. I'll check for my key level if it's present and I'll mark it out. So even key levels are even very straightforward. If you have a key level, you mark it out. What must you see for you to know that okay, your key level is about to hold, there must be a rejection. So that one is even much more straightforward and even is rule based. I love rule based strategies or methods. Like this is like a neckline here. That's like our SBR, right? Support become resistance. And what must you see? You must see a rejection. Can you see that rejection from there? So that's another thing that could have also showed my POI. That line and there's a rejection. Once you get the rejection, you look out for a 4 hours breakout, and you build a storyline from there. So that's how we use it. But let's go over to 4 hours again, and let's see. So since we have chosen a POI and we have our break of structure, right? The next thing is now entry. I told you your entry here is going to be dependent, and of course, using the 3 time frame rules as shown earlier. Higher time frame is where we have seen the clear trend and the BOS. Okay, medium time frame is where you plan. That's where you entered our continuation from. Lower time frame is where you execute. So on lower time frame here, what are we going to execute here? So let's go to lower time frame first. This is like a raid of a buy side tapping into a POI. So price is raiding the buy side liquidity here. Okay, before tapping into, so this one is meant for this is PDR is showing you the POI, and that line also is the key level showing you the POI. So they are both saying the same thing, but of course, since those place is not the exact place you want to buy from, you actually want to use that place as reference. Then we now enter with confirmation. So our confirmation will be seen on a 1 hour time frame. If you start on daily, you stop on 1 hour, not below it. So if I go to 1 hour time frame now, let's see what I would have done with this. Let's go ahead and see what 1 hour will look like for the entry. So part of the things I showed you in the entry plan earlier is what we're applying. Nothing else. We're going to apply it exactly as it is here. So first thing we must see is is MSS. If that zone is actually valid, let there be what a structure shift from that zone. So right here, what do we see? We have price clearly mitigating the POI and breaking these lows. Of course, breaking even more than one low. So that's example of what we call our market structure shift to the downside. So once I see that MSS, that confirms to me that truly we have sellers at that zone and they are willing to continue going down. Next thing is where I want to enter. So I will go and search what are my plans for entry. Should I use OTE? Should I use what exactly should I use for my entry? So those are the questions you would want to ask next. So let's take a look at it. So what are the options actually? Yeah, do we have a breaker or order block? The order block is right at this point here. That's the last supply zone here. So that's the order block. But then don't always, in fact, in cases like this, don't go and be targeting that place to be your sniper entry point or entry point too. So you should look out for breakers. So over here we have a breaker, and that breaker is also the one that was taking out this our last buy side liquidity. So in case you don't know a very good breaker is the one that forms a high. So this is a breaker. That exact order block that breaks a high, that exact order block that breaks a high, and also price breaks through it to create a low. So that means there must be a break above here and there must be a break below here, all having imbalance. Clearly, you can see that point is the exact turning point for the entry. Do you understand? That's exactly the turning point for the entry. So let's now assume you don't want to use this as your entry. And again, I told you to use breaker instantly when liquidity is involved. Remember, if liquidity is involved, use breakers instantly. Right? Look at it. I said it here. If price was taking out liquidity, you can use the breaker. That means without waiting for an inducement to be above. But if it was just a normal POI, then you must wait for inducement before you can choose POI. I made that particular law clear earlier. Another thing you could have done is also using OTE from this low to this high. Let me apply OTE now. So if I was going to apply, I'll do it from the high to the low rather. Is it high to you? Let me check. Yes, from the high to the low. Yeah. So this is our 62% here, and this is my 70.1%. So let's even assume I was going to use 62% here because this is a very big this is a very big picture, right? So if I was using 62% here for my entry, like I said, I do not care about where the sniper entry or anything. I just care about making an optimal entry. So if you catch a trade from this 62%, let's just do several options. If I catch it from 62%, my stop loss being above the high, my TP will be where the previous low, obviously. So the previous low is this point. So if that's my TP, I place my TP there. That's a 4.12 weeks to reward. So if I also go ahead and I do it at my 70.15 encore, that's 5.9. Now, this is how you use OT. So in OT entry, you don't care about IVX to reward because that one, there are several options. But one thing is certain, your entry will be given. Like you will get your entry for sure, right? You will get your entry for sure. Another thing is you might want to place your stop loss below, but I don't advise that. I like to place my stop loss at the point of invalidation. However, if I was using this particular breaker as the entry model, right? If I was using this particular breaker as my entry, another thing I could have done using breaker is I'll also use that breaker as a reference and then go ahead and enter on a lower time frame. So over here, we had something like that here too. But if I was entering from that breaker exactly, I would have done it like this. Entry placed here, and my stop loss would have been placed above this particular neckline. Look at this. Up, down, up. So that's like the breaker pattern for me there. So my entry would have been placed above this particular breaker, my stop loss rather. And my TP will be placed at the, of course, the previous low of the trend. That's the target. So, of course, that one offers a much bigger and more robust entry and, of course, target as well. But, what if this particular POI is not the exact POI? So, that's one of the things that OT removes. You don't have to worry about the POI, just enter. That's what OT will help you do. It will help you enter without missing out on the trade. This is another example of our double break of structure as well. See, a low was taken out here, another low was taken out here. So that's what multiple break of structure. So what would you do in that instance? You would definitely wait for price mitigating a breaker or an order block. So this is the last POI, right? Because every other POI above here, they have all been mitigated. So there's nothing above that is left to be mitigated. And apart from that, price also built up liquidity here. Okay, this is under liquidity build up here. That's liquidity build up there. Buy side liquidity. Well, where was this? So the entry with this one would have been, let's assume you want to enter this. Your entry would have been simple. And where would that be? You would either start with if this is on 1 hour. I think this is a very I love this example as well. So it's not going to be only on the daily or 4 hours alone. As long as you have this on a particular, like it's just trading BOS. What is your trigger here? The trigger for this setup is the BOS. Okay, that's what actually made me even see it. The BOS. Once I saw the BOS, I knew that okay, there's something that will be traded. So you can now enter, which is a retracement back and all of those things. So let's even go back to 4 hours. Let me take this to 4 hours. Let me use 4 hours to take the glory. By saying using 4 hours, I mean let me take it back to 4 hours and let's now build it up from 4 hours all the way down. So on the 4 hours here, we have seen price, we'll go and check. Another factor is that there must be a mitigation. So you must check, was price mitigating something here before you add your BOS? Remember, that's another factor for confirming a BOS, right? Check if there was a mitigation before it was actually formed, so that can even give you much more confidence and peace of mind. So here, this is the breaker though. This is the breaker block that price reacted from. Price reacted at the breaker, right? There was a breaker block there that price reacted from. So if I was going to use this particular one, I would choose my PDRs also, right? I'll choose my POI. So where will be my POI in this case? I've seen the break of structure, the retracements. Is there OCL? Okay, this is OCL. Yeah. That's if I was using a key level for my POI2. So, but if I go to 2 hours or 1 hour, all right, nice one. So this is under entry from this point. So this particular entry would have been taken because of the presence of liquid. Can you see? This is the key level here, clearly the breaker here. Clearly the breaker here. That's a breaker block there. So I would have used this particular one as my entry. And if I was not even going to use, like, let's say I was going to take confirmation entry, then this is the one of the stop on. That range, I one of the things I taught you that forms a BOS is when we have a stop on. Remember, I think I mentioned that also when we have a stop on before a break of structure. Look at this. Price grabbing a liquidity before breaking structure. This is an example of it here. Price grabbing liquidity here before this particular break of structure. So in that case, you also know that what you have a very, very, very good BOS, which is a trigger. Okay, this is on that very good trigger. Entry would have been from where? From the supply zone that we have right here. Okay, your entry would have been from this supply zone here. I can even use this particular key level as my entry too. That's the A-shaped key level. So if I was using that for my entry, I would have definitely used maybe instant or confirmation entry again, price doing this, displacing below this particular point, and entry inside this gap. So another entry could have been taken here. Although this particular entry plan was not defined for you. But of course, that's you like not just instantly getting in on the entry, but entering after seeing confirmation. Entry target would have been where the previous low, which is this one here. So this is, and of course, what was the trigger? The BOS was a trigger, and of course, the price taking out liquidity and mitigating. So these are factors that you check to look at this. Also, this is price taking out. In fact, this is part of the things I thought yourself. No doubt. Why? Because this is price taking out liquidity first. So, and I told you, if price was taking out liquidity, the breaker block would definitely be the entry, right? This is an example of it. So I think it's still within the constraint of what I taught you. So then which other thing again? We have under BOS here too. Yes, this is under BOS here. Under BOS with inducements. Can go to 4 hours and go and check what would have been done with it. Okay, now, so the reason why this particular setup would not have worked anymore, because normally once I have this kind of setup here, my target, or once I have this particular BOS here, see this BOS here, I would have definitely expected price to make a push back into premium to a level here for me to sell. But right now, price already got to the main target, which is the external range liquidity. External range liquidity, which is, you can see the previous line, I mean. So and once price takes external range liquidity, like this one here, it needs to go back into internal range. So that's the reason why price will not go into all of this level. It will want to go for internal range, right? So price went all, you can see price went all the way to internal range before now finally going back again to external. But when it was still internal here, when everything was still internal structure here, before getting here, everything was being obeyed normally up till when we had that final target being reached. But then that's the beauty of it, right? So, and I believe this explains the model much better. Thank you.